Yo, what's going on, guys? Bot Mentality here, and I want to just go over a quick trade recap from earlier this week. This was two options, two call spreads. I had actually traded on Tuesday and Wednesday, and they ended up closing Wednesday. So one was a Tuesday. I opened it on Tuesday and then closed it Wednesday morning, and another one I opened on Wednesday and held that one till expiration on Wednesday. So I just want to kind of talk a little bit about that and kind of how I'm feeling about the market right now heading into tomorrow. So the first thing we had here is I am looking at the SPX. Remember, the SPY is just an ETF of the SPX. So on the SPX, essentially what you can see here, I'm on the 5-day chart. We had consolidation here hanging above that 2750 level right here. We saw consolidation, lower highs over time. The lows were holding in relatively the same place before we saw a gap down on the SPY and an open lower. So this right here, this day where we gapped down was Wednesday. And so on Wednesday, essentially what ended up happening is we saw a quick sell-off when we broke the 270 on the SPY, a bounce, and quickly got bought right back up, and then a higher low here, which when we check the SPY, you'll see this higher low we made correlates with a surge on a break over VWAP here on this day. So we saw the gap down, right? Bounce, rip through VWAP, and we're making higher lows here up towards the high a day. Now, given the market sentiment, and we had issues regarding we had earnings. You know, there was a lot of earnings going on this week. There were a lot of fears regarding the China tariffs and just all a mixture of different things. We've been seeing a really rough market here over the past couple days, and so judging from the momentum, the size of the gap down, the fact that we didn't hold that 2750 level, I estimated that 2750 here on the SPX was going to act as resistance. The level we held here during this consolidation was going to act as resistance here for this next day, and then from there I figured we'd likely head down to test the lows. Because if we jump back over here to the SPY, and I'll show you, this day when we gapped down, we broke the 274. That was very significant because if we go back here on the 10 days, you can see that in a 10-day span, we broke the lows of every previous day here in this sort of equilibrium pattern we had back between the 11th and the 15th. We saw the higher lows break upwards, rejected the 281, pull back, and then we broke that level, which on here is going to be the 272. We broke below that here on Wednesday. We broke every single one of those supports, and so I knew that was a bearish sign. So everyone who bought during this period was going to essentially be holding bags, and they're going to want to sell off the next move. The most likely spot for resistance would be the previous consolidation level. So right here on on the SPY would be the 274. If we jump back over here to the XPX, you'll see that that just correlates with the 2750, right? So that's what I did. So we saw the gap down here on Wednesday right here, surge through the VWAP I demonstrated on the SPY, the previous chart, and then we came up here to test towards the highs of the day. So at this point, I was definitely thinking of opening a call spread because of the fact expiration wouldn't be until Wednesday. And this was Tuesday right here. I wanted to go ahead and open that up. So pretty much what I was waiting for was a bounce towards the highs of the day, excluding pre-market, to open up that call spread. So I opened it up right here on the SPX, and I ended up opening up a 2790, 2800. So I had plenty of room there, guys. So to visualize that, in order for me to lose on that trade, a max loss, the SPX would have had to continue climbing, break the 2750 resistance, which you can see it topped out, continue climbing higher, break the 2780 and the 2790 to get over the that 2800, which is where the previous high was here of the 5-day high, right? And I did not see that happening, especially since we had a technical breakdown lower and there was a lot of bearish momentum and the sentiment wasn't bullish. So I waited till we got a pop to raise the call premiums, went ahead and sold it right there. So think of that as, when I sell the call spread, think of that sort of as shorting the market, because they call it a bear call spread because you have a bearish perspective, right? So think about it like that. And so essentially what I did is I went short here. Now the price did continue to climb up. So as it climbed up, I did have an unrealized loss. Me getting better as a trader is minimizing the amount that this was. So, before, when I was newer to call spreads, I might have opened it in this pullback and collected a much cheaper premium just to have it run up on me. Even though in the end I was correct. No, you don't want to sit, as far as a risk reward management, you don't want to sit in an unrealized loss during a trade. The best trades are ones that, are in your favor right off the bat, or, pretty quickly, right? So I opened up the trade right here for the call spread at the 2790, 2800. And again, it would have to break this level right here for me to hit that max loss. And of course, it didn't get anywhere near that. It climbed up. It saw resistance right there at the 2750, which is what I predicted here based off these previous lows. And then we sold off into the close. And as you can see, we gapped down and sold off the next day. At the open, after this, well, and by the way, when I opened this, I collected 2.32% in profit. And the reason why the profit at the close was less was because I didn't expect, when I opened the call spread, I didn't expect the price to continue climbing this far, even though it did find resistance there. I was expecting us to reject higher days and head down lower. So as soon as we got to the open, I saw us pull back. Time decay, as you know, takes into effect when you're a seller, when you write the options and you sell the premium. Essentially what happened was the time decay was in effect, so that even though the price was above where I entered at, the time decay was in effect because this was expiration day, which was Wednesday. So they were considerably cheaper. So I went ahead and took it off, and I collected around 80% of the profit. It was the majority of the profit here. So initially when I sold it, I collected 2.32. I bought back the long side of my call spread, or excuse me, the short side of my call spread, and I ended up giving back the difference between these two numbers, and I was left with a 1.575% profit. So I went ahead and closed that early right there at the open on that yank, because I didn't know if we were going to gear and head up to break the previous resistance there, as I didn't expect such a strong bounce. So now for day two, I took that trade off first thing on this day, and I should be able to go to the 1 day 1 minute and show this to you. Yep, and zoom in on that. So I took that trade off here the first day. And then as I saw us continue to sell off here and make lower highs and start to make lower lows as well, and acceleration down here to the downside and a bounce, I had a good feeling because of the fact that now we have more resistance to risk off of, right? Because we pulled back and we're seeing this, we sold this sell off and a bounce. Now we have the 2750 pivot high to risk off of as resistance, and we have all of these right here. So I was looking to see how high could I open here, it being a couple hours into the day. It was around, let's see exactly what time. I can tell you exactly. It was right about here. So it was at 11:15. So the market had been open already for almost 2 hours. And we're already seeing extreme bearishness out of the gate. A lot of people were worried about us going red on the year, which we ended up doing there, and on the pullback there into the close. So a lot of people were freaking out. I didn't mind opening up a same-day expiration trade with a smaller size than the previous day to help protect profits. And so what I went ahead and did was open up another call spread, which I will show you down here. That was the 2755, 2765 call spread, same day expiration. This one I collected 1.51%. Just looking to pad the wallet essentially at the end of the day. Now, where I could have done better on this trade was I opened up, this is what I saw, right? I saw us pull back here, accelerate to the downside for the bounce, which I knew was likely going to be sold off heavily. On the SPY, what you're going to find is, let me go back a day here. What you're going to find is we were below VWAP. We rejected VWAP, tried it again, and we pulled back. So I opened up on this bounce at the 270, thinking we're going to head straight down to the 267, 266 right away. What I should have done in this situation was opened up my call spread on VWAP on the 272 reject. But I really, given how heavy the selling was, I didn't see us getting that high. I just waited for a bounce to when the premium jumped up a couple cents, and I went ahead and sold another call spread, which again was the 2755, 2765. So you can visualize that. We jump back here to this previous chart. The price would have had to go, because I sold it right here, the price would have had to go above the previous high a day to hit me, because I did a 27.55 right here, so right there at high a day, and the 27.65 above that. So we would have had to reverse, get back through VWAP, which is where we rejected right here, and continue heading up and close above that level in just a couple hours since I opened it, towards the middle of the day in order to hit my call spread. That didn't end up happening. As you can see, we rejected and accelerated to the end of the day. I was at max profit pretty quick. Around 3 o'clock, I was at max profit. I just went ahead and let it expire worthless because of the fact that, look at this, it's dump into the gate. People were freaking out. So in hindsight, I could have had a better entry. I just wanted to kind of give this in a sort of, this video, I wanted to just document my thought process and how I can improve my trading and how it went. Even though both trades I made money, the first trade I could have had a better entry, and then I would have had a slightly unrealized loss through that. And the second day, the first thing I could have left my first trade on, because remember, I was all the way up at the 279. You know, it didn't even get close to that. I could have collected max profit, the full 2.32% instead of just a portion of it. And then on the second day, I opened up that trade here on this green candle. This green candle right here, when I should have just waited for us to head up and test VWAP. It would have been a much less stressful trade as far as you know, the unrealized loss, and then at the same time I would have had that resistance. So moving forward, I'm going to make sure I'm opening if I'm opening a bear call spread, I'm opening it into resistance. So at least on the intraday time frame, right? So VWAP, any horizontal level you'd like, any resistance pretty much. But yeah, so I won on both trades. And to wrap this up, I know a lot of you guys don't quite understand options, but to put this into perspective, I wanted to kind of add those two up. So I collected 3.26% return, okay? And so how you want to visualize this, a lot of people say, well, 3%, you know, that's not much, but you have to look at a daily basis, a weekly basis, a monthly basis, and what that means depending on the capital you use. So for example, you know, in the event, you know, you made 1.5% of just 5,000, you're looking at $75. You know, double that, you're looking at 150 bucks. That's a lot of money, guys. If you can just do that twice a week, you know, or 3 times a week, or 4 times a week. If you have $10,000 to work with, you know, you could have made 150 bucks, $300 if you double that, right? That's a lot of money if you do that twice a week. You know, who couldn't use an extra $300 a week, right? Trading this. And so some of the reason why some people kind of try to stay away from the high probability of success options, because they're, you know, they want to make more money. They're looking for those 15, 20, 25, 50, you know, 100% gainers. But really, realistically, if you look at it on a day-to-day basis and you're looking for consistency, the small money adds up, guys. 1.5% of a $50,000 account, you're looking at $750. You know, and I collected double that, double the 1.5%, right? So I wanted you to keep this in mind and remember that even with a small amount of money, you can still make a good bit if you're selling options. If you make sure you're on the selling side, not the buying side. You're staying way far out of the money. You're having a higher probability of success because the chances of, you know, the price of the SPY rising that far are slim. They're very slim, and so you can have a higher consistent win rate. So that is it, guys. I just want to kind of recap those trades for you. If you have any other questions, definitely leave them in the comment section below or shoot me an email. You can tweet me on Twitter, as I'm available there at any time. And I alerted all my entries here as far as my options trading on the SPX live in my Discord. And also I kind of detailed my plan before, you know, Tuesday, and I sent out a newsletter Monday night where I kind of detailed everything I was going to go into, what my strategy was for Tuesday. So definitely, guys, let me know if you like this style of video where I'm just sitting here and just talking about my trades, just kind of recapping it. And yeah, let me know. I'd love to do more of these in the future and really kind of just document my path here and learning options and just jumping into it. I'm having so much fun, guys. And yeah, that's it. I'm going to go ahead and get out of here, guys. Continue to stay focused on controlling your emotions, developing that bot mentality so you can trade like a machine, guys. I'm out of here. Deuces.